a resurgence of inflation. You know, remember that higher for longer thing? I'm going to bring in now Traderade co-founder Ayesha Tariq. And Ayesha, you know, my goodness, my head always spins, particularly in the last year, the ping-ponging of opinions about the Fed, right? For most of last year, the consensus was higher for longer, right? That inflation was going to come back. And so the consensus changed on a dime. And now you think maybe people have changed too quickly?
Hi, Charles. Thank you for having me back. So you're right. It's been such a roller coaster ride. So about inflation, I think we definitely have those external shocks, but such as, you know, higher oil prices and freight rates. But our contrarian call is based more on the internal factors, which is this premature, you know, Fed rate cut expectations. And we think that this could possibly rekindle animal spirits, which could start a new credit cycle and push up consumer spending. We also think that the government may attempt to spend their way to a re-election here, which could also cause inflation to remain sticky. So there's a chance that the Fed could remain higher for longer.
Mm-hmm. So with that in mind, and I think Don alluded to it, maybe the Fed trying to have its cake and eat it too, right? Particularly with the jobs market. I mean, the jobs market is in better shape than it normally would have been after such an aggressive Fed effort to quell inflation. And it gets back to that Powell victory lap. It just feels like maybe it was premature.
So I would say that the Fed has actually gotten lucky with the jobs market because there's more demand for labor than there is supply. And this is more to do with the wealth effect and with baby boomers retiring here. So, and job openings are still close to about 9 million, where we should be having about 7.5 million for the market to be, you know, ease, you know, not so tight. So I think, you know, this could keep spending going higher and the Fed could actually end up cutting before any signs of a recession comes along.
So I was reading your note, and the one word that stuck out to me was flexible. You'd say investors should remain flexible. What exactly does that mean?
So we think the market is very volatile here because of all this uncertainty that's going on. Do we have a recession? Do we not have a recession? And we also think that different parts of the market are, you know, in different parts of the cycle. Some are late cycle, some are displaying early cycle properties. So what we would suggest is for investors to keep an open mind, you know, to look for quality growth companies and not to get too heavy in chasing price here.
Yeah, that's the big, everyone's chasing price, but it's ironic because it's the major firms. Every day I wake up and all the major firms on Wall Street all of a sudden like names that are at 52-week highs and have been up 30, 40, 100% in the last year. Hey, with that in mind, let me just quick over some of the names you like, particularly for the audience on radio. AER, AirCap, DSGX, Discarded Systems, and KNF, Knife River, and also Oracle. I got to ask you about this Knife River. I've got 30 seconds. I've never heard of it.
So it's a spin-off from MDU Resources. Basically, they do construction materials and contracting services. They're across 14 states, and they're very strategically located, so they can actually charge very competitive prices while increasing margins. So we think it's a growth company here.
Hey, so you really, really do the work. There's no doubt about it. We appreciate you sharing it with us. Talk to you again real soon.
Thank you.